Uber reporting better than expected earnings, but revenue fell short. Shares right now, take a look. You're looking at 82.50 on the stock, down about 3-4%. Joining us right now, first on CNBC, is Dara Khosrowshahi. He's Uber's CEO. Dara, it's great to see you this morning. Look, it looked like a beat across the board, actually a big beat. Stock not reacting maybe the way you'd want it to, but maybe expectations were marginally too high. I don't know how you think about that.
Yeah, it's tough to track daily stock price changes, Andrew, but I think the results were spectacular. Our transaction growth, over 3 billion trips served, both on rides and eats, was consistent with last quarter at 18%. Gross bookings growth came in very, very healthy as well, similar number. And then adjusted EBITDA was up 35% on a year-on-year basis, over 2 billion in cash flow. So the company continues to execute well. And, you know, the stock price has performed really well this year in a tough market. And, you know, we'll have our good days and bad days, but hopefully the good days will outnumber the bad days. We're very happy with the results and the momentum of the company.
I was going to say the margins on the mobility business, meaning those folks who are getting in the cars, is, you know, a standout. How much pricing pressure, if you will, or opportunity power do you really have?
You know, pricing has been an area, you know, we want to keep our rides business as affordable as possible. And if you look at the growth rate between kind of last quarter and this quarter, our gross bookings growth rate on mobility slowed down because we didn't take price. So last quarter, for example, price increased by 4%. This year, pricing was essentially flat. And that's really for two reasons. One is we saw the insurance costs. Insurance has been a huge factor in terms of inflation, not just in transportation, but also home insurance, as you know. We saw some relief in terms of insurance increases. We passed that on to the consumer as it relates to our mobility business. And we did see a slight mix shift in terms of trips to more international trips, especially as we saw outbound travel to the U.S. slow down a bit compared to the overall travel sector internationally as well. So pricing is something we're very well aware of, and actually we're happy to pass on some of the pricing relief we saw to our consumers.
What do you see in terms of the mix between the mobility businesses, the ride business effectively, and the eats business at this point? So if we were to look today at a pie chart in terms of what the business looks like, mobility versus eats today, and you sort of look a couple years out, what do you think that looks like?
Well, listen, it's like a Ferrari racing a Lamborghini. They're both going incredibly quickly. Mobility grew 19% on a year-on-year basis. Delivery delivered a second growth rate of 18%. The two are, you know, pretty close to the same size. Mobility is a little bit bigger in terms of gross bookings, but our mobility and delivery businesses are hitting on all cylinders. I think it's going to be a great race, and I can't predict the outcome.
There does seem to be, though, a bit of a war going on in both the delivery and mobility wars. Lyft announcing it's going to go international, so this has become an international war, if you will. DoorDash yesterday saying they're buying Deliveroo, so there's a whole sort of host of things going on. You're buying a business in Turkey. How do you see that all playing out?
Well, we see these spaces, both the mobility and delivery spaces, they're trillion-dollar-plus markets. Competition is natural. For us, we've been in an enviable position in that we built most of our global footprint organically. We built these businesses, over the past 15 years, brick by brick, trip by trip, so to speak. And we've always said that the platform advantage that we have, both being in mobility and delivery, and our global scope, really having exposure to all of these different economies, has been an advantage. Now that you see our competitors have to buy their way into the international markets, it shows you that our strategy is working. I'd much rather go organically. Turkey, for us, was one of the largest unaddressed markets in terms of delivery. Trendyol is a terrific business. They've got a great team, great tech team, and we just couldn't resist going into Turkey. We've had a lot of success there in terms of mobility, and we hope to duplicate that with acquisition and delivery.
Mentioning DoorDash, we're going to actually have Tony on later, the CEO of DoorDash. You are suing that company,
yes,
claiming that they are involved in coercive tactics, quote, to reduce restaurant consumer and consumer choice. Where does that stand, and why did you feel like you had to go to court?
Well, we wanted to go to court to essentially give merchants more choice. There's a direct business where ourselves and some of our competitors essentially empower merchants to be able to deliver for themselves, for their own website, et cetera. It's delivery as a service. We think that should be an open market. And right now, we don't see that as an open market. We see some of our competitors trying to make some anti-competitive moves. We just want to give our merchants more choice.
Talking about anti-competitive moves, the FTC, you faced a lawsuit from them, which says that you're charging consumers or have been charging consumers without their consent for a service called Uber One. I don't know if I still am signed up for Uber One. I might be,
hope you
Dara.
are.
I'm not sure. And maybe that's the problem. I don't know. But where does that stand? And do you think there's an opportunity to settle that case?
Well, it's a bit of a head scratcher for us, Andrew. You know, Uber One has been incredibly popular. We've got over 30 million subscribers now to Uber One. 60% of our gross bookings come in our Uber Eats business come from Uber One members, and that continues to grow. The suit alleges that, some people don't realize if they're signing up or cancellations are difficult, but I'd encourage you to go experience it yourself. It's very, very simple. You take a couple of steps to be able to cancel if you want. And the good news for us is Uber One growth indicates that consumers are seeing the reward in this program and the savings, and our Uber One business continues to grow at very, very high rates.
What are you seeing in terms of the consumer, the strength of the consumer? Obviously, there's been lots of concern and worries given all of the tariff conversations and everything else going around the country. We haven't really seen it in the economic numbers. Has it shown up in yours, or are you seeing anything sort of moving forward?
We watch the same news you do, Andrew. And the fact is, as evidenced by our results, we don't see any consumer slowdown at this point. Our audience growth up 14% is very consistent with what it was last quarter. Frequency is now at 6 trips per month, continues to be at highs, and our frequency continues to increase year on year. We don't see consumers trading down, to more affordable restaurants or pulling back from any of our services. So we haven't yet seen any signs of consumer weakness. I'd say the only kind of shift that we've seen in spend is a bit more travel spend internationally than in the U.S., but otherwise the consumer remains strong. And we're in a couple of categories, food and transportation, that tend to be quite recession resistant anyway. So far so good, but we're watching the consumer very, very closely.